Let's cross over to Asia, where it's already, of course, it's getting to early Saturday morning. But the market on Friday was a little bit better. Hope rising on the potential trade deal between China and the United States. The Nikkei 225, that's the broadest stock index for the Japanese market, up about 0.4%. The Topix index added about almost the same margin. In South Korea, the Kospi rose about 0.14%. Shares of industry heavyweights such as Samsung Electronics slipped about 0.2% after the company warned its first quarter profit for 2019 will likely drop as much as 60% compared to a year ago. What's happening to all the Samsung phones? Let's wait for the numbers. Meantime, Australia, ESX 200 slipped almost 1%. Nearly all the sectors were seen red on Friday. In stock market in China, that's the bigger brother China, and the Hong Kong market were closed on Friday for a holiday. So it's going to be a good morning in the United States as we speak. So where are the U.S. stock futures today? Trading slightly higher. That's on the stock futures just before the opening bell, about 3:30 p.m. Nigerian time. Investors monitoring the progress in the trade talks between Washington and Beijing and looking ahead to the upcoming jobs data that Janelle Dualo spoke about earlier. Earlier on Wall Street, the Dow Jones Industrial Average futures were up about 0.13%. S&P 500, 0.16%, and the NASDAQ, the tech-heavy stocks, the largest technology-heavy stock exchange in the world. That's the NASDAQ there for you, up 0.22%. So the South African Rand firmed today, and it's on course to gain about 3% this week against the US dollar. As appetite for local assets was lifted by Moody's delaying a credit rating review and optimism over US-China trade talks. And that's one of the big stories this week for South Africa, with battling electricity shortage. But let's come back home here to Nigeria, where there have been talk by the Bankers Committee and the Central Bank of Nigeria to ensure that we get more intervention in two critical sectors. Agriculture, the Bankers Committee on Thursday identified 5 agro crops, or what you call cash crops, or agro products, to have a fresh intervention, 200 billion naira. Meantime, the Bankers Committee, which includes the Central Bank, of course, sitting at the head of the table, is looking at another size of intervention, not announced the size, but this will be for creative industries, for those who are into movies and music and everyone else within the value chain. The authorities said there'll be an announcement within the next 2 weeks for those who have proposals for this intervention fund. This will be coming in at single digits. That's part of the stories making the headlines from here. But let's step on and look at a few other stories around the continent. South Africa's power sector, as I said earlier, the crisis there is not yet over. Public Enterprises Minister Pravin Gordhan assured the business community and the public at large that the load shedding by the utilities giant is over. At a press briefing on Wednesday, Pravin Gordhan asked the political parties not to use a national crisis of Eskom to campaign and that the situation is under control. Gordhan further said that Eskom's problem, Eskom has a winter plan, a plan for winter to keep the lights on, but efforts for the public and the business to reduce power usage will be greatly appreciated. If everyone just try to use the power marginally and keep electricity running. Let's stay with South Africa. That's Africa's most advanced economy. By the way, data from the Reserve Bank is showing that the country's net foreign reserves fell to $43.26 billion last month from $43.65 billion at the end of February. Gross reserves also dropped to $49.67 billion from $50.83 billion earlier. The forward FX position, which represents South Africa's central bank's unsettled or swap transactions, was $2.04 billion from $1.36 billion in February. Of course, the big story coming from Nigeria this week is the Debt Management Office says the country is planning to issue first ever 30-year Naira bond in the country's history. According to the Director General of the Debt Office, Patience Oniha, the bond will help Nigeria to develop the domestic capital market and reduce the refinancing risk of the Buhari's administration. Let's take a listen.
Most of you would have observed interest rates have come down significantly, again, partly due to what we did of returning money back to the market. And thankfully, the Central Bank of Nigeria has dropped the monetary policy rate. Okay, so this is a good time to go back to that strategy of avoiding the risk associated with refinancing. Okay, so it's good for the government to access long-term funds to reduce refinancing risk. Most of you would know, and I believe if you attended the training by the Financial Markets Dealers Association that the DMO organized, you will know that when the government operates in the market, it creates a platform for other borrowers. So once we issue a 30-year bond, it then immediately means that other borrowers who are eligible means credit worthy, because the investor will be looking at all of those, can also issue a 30-year bond. Why is that so? They'll say, okay, the federal government issued a 30-year bond at this rate. So if I, as a company, want to borrow, this is about what my rate would be. So technically, we describe it as extending the sovereign yield curve to 30 years.
Well, let's take a break. We'll be right back.